Thank you for joining Jennifer Schatz and Associates in our 2019 Webinar Wednesday series. We are coming to you live from downtown Washington, D.C. Our webinars are every Wednesday, and you can find the upcoming schedule on our website. Past webinars and all recordings are on our website and on our YouTube channel, along with over 160 other recordings on federal contracting topics. All are complimentary. If you have questions for our speaker today, you can email her with the contact information you see on the last slide. All right, just a little bit about us. We are Washington, D.C. based firm that provides services for federal contractors. This ranges from market analysis reports to proposal writing and also post-award compliance. More information is on our website, so please visit us. And these are a few upcoming events that you can find more information here or also on our website. And we now offer advertising. You can reach out to me if you want more information. And our webinar today is sponsored by AccuTrack, and here's a short message from them.
AccuTrack Consulting and Accounting Services is an Inc. A WOSB CPA firm committed to supporting entities to sustain growth in government contracting. Our outstanding DCAA accounting solutions reduce audit risk, improve cash flows, and give you peace of mind. Contact us today to learn how we can enhance your DCAA accounting efforts.
All right, so let's get started. Our speaker today is Mary Beth Bosco from Holland & Knight. She's going to be covering post-award compliance pitfalls, and I'm going to go ahead and hand over to you, Mary Beth.
Thank you, Mallory. Can you advance the slide, please? As most of you are probably painfully aware, government contractors are subject to compliance requirements, regulatory requirements that commercial contractors do not have to worry about. The overview of what I'm going to be talking about today that falls within this category, we're going to do it by FAR section. So the first is FAR Part 3, which is sort of the how you behave, what are the good and bad things section. FAR Parts 15 and 31, which talk about government cost accounting principles and cost and pricing data for negotiated procurements. Part 22, which establishes standards for employment and pay, and Part 19, FAR Part 19, which has the requirements for a small business subcontracting plan, and also there are more and more requirements that relate to the ability to trace your supply source. And then we will end with the cybersecurity standards, which if you are a DoD contractor, you absolutely know about. Next slide, please. So FAR Part 3, like I said, has a lot of ethical behavioral provisions. One of the hearts of that section is 3.10, which requires contractors to have a written code of business ethics and conduct, which has to be provided to every employee engaged in the performance of the contract. Now, the government does recognize that no one size fits all, and it will it allows for variance in these plans. Obviously, a company that either does very little business with the government or as a small business is not going to be expected to have as comprehensive plan and training system, et cetera, as a large company that does, a good bit of its business with the federal government. In addition to the plan, the code of conduct, you have to have a fraud hotline poster displayed. And, that, of course, includes having a hotline process, a process for investigating hotline calls, and also, very importantly, something in your code of business ethic and conduct that states you will protect whistleblowers from reprisal action. That's actually a requirement imposed on many federal government contracts. You are supposed to also have training and an internal control system that's designed to, check on your own systems and policies and procedures to make sure that they are being carried out correctly. Not everyone is covered. For example, you don't need to have a code of business ethics and conduct unless you have a contract over $5 million and it is performed inside the United States, or it's a commercial item contract. So those are the three exceptions. We tend to advise all contractors to have a code of business ethics, even if they don't meet these standards, for two reasons. One, it will prevent the company from, hopefully, from, crossing lines and doing things that it shouldn't be doing. And two, if there is ever a government investigation, the first thing the government will ask for is your code of business ethics. So, I think regardless of size, companies should have these. Next slide, please. One of the other reasons for a code of business and conduct is that it will place in your employees' minds the importance of detecting any violations of law, regulation, or even your own policies, and it will train them to keep on the lookout. The reason for this is that under FAR 3.10, if you have credible evidence of a violation of federal criminal law involving fraud, conflict of interest, bribery, gratuities, or a violation of the Civil False Claims Act, you must report that to the agency office of Inspector General to which the contract relates. If you don't report it and the government finds out later, you can be subject to debarment or suspension. The most prevalent issue that comes in complying with this provision is, what if you have a suspicion or an employee comes to you but you haven't been able to confirm it? How long can you take to investigate? And that's a really reasonable question. The standard is, do you have credible evidence? So I think, what happens very often is that a relatively rapid investigation will be done of the allegation, enough to, give you, pretty certain findings that there could be a violation. In that case, what we would typically do is make a disclosure to the agency, Inspector General's office, and say, look, we have found this. We have not finished the investigation. We have not actually concluded that it actually happened, but we think it rises to the level of credible evidence, and we will be getting back to you once we do our investigation. And that gives you a chance to take a little bit more time to do your investigation. And unless it is a startlingly bad disclosure, usually the government will be happy to let you do your investigation and report back. There is a lesser standard that you also have to report whenever you become aware of an overpayment by the government as a result of a mistake on an invoice. What some companies do is, particularly larger companies, rather than reporting every single instance or misstatement, just a mistake on an invoice, they do sort of a wrap-up report maybe every month or every quarter that would include all of the instances that fall into this category. Next slide, please. The federal government contractors are also subject to employment and labor laws that their commercial colleagues are not subject to. probably the one that gives people the most heartburn is the Equal Employment Opportunity Clause requirements, or as people call them, the Affirmative Action Plan. They are a pain to set up, but once they're up and running, keeping track of the information becomes easier and is very often the result of the software package. In brief, you have to have an affirmative action plan, and that plan, what that plan does is it requires you to break down your workforce according to job categories, and then state the number of protected class of employees that fall within each of the job categories. So, for example, Black Americans, Hispanic Americans, disabled women. There are a number of categories. Those numbers are then, or percentages, turned into percentages, are then to be compared with the available workforce for that job description in your area of hiring. So it's very important to state the requirements for each job category specifically, because that will, narrow the group of potential applicants that you are making your comparison against. You also, once a year, have to report your workforce demographics to the Department of Labor with wage information. And again, that will be a report that tells the Department of Labor the percentage of protected classes of employees that are working for you. The affirmative action program is also designed to eliminate, if possible, any bias in both the hiring process and your employment actions. So, for example, your plan will include statistics on, who was terminated in a given year, who was demoted, who was fined, etc. And it will also track wages to make sure wages are commensurate between groups. And you'll also have to keep track of hiring decisions, again, to make sure that hiring criteria are being consistently applied. Next slide, please. The entities that are covered by the Equal Employment Opportunity Clauses, it has a really wide sweep. So if you've got a contract of $50,000 or more and 50 more or more employees, you're covered. If you have contracts of 100,000 or more, you have to make sure that your procedures cover veterans. And then even lower threshold, 15,000. If you have a contract or contracts valued at 15,000, you must have equal opportunity programs for workers and job applicants that have disabilities. So again, it's a pretty broad coverage. The issue that we get asked very often is, if a subsidiary does federal government contracting, but the parent does not, does the subsidiary's requirement for an affirmative action plan and all that goes with it, does it bleed into the parent? And the answer to that is, it will depend on whether the Department of Labor would take the position that the subsidiary and the parent are a single entity. And there are a number of factors that you look at that are part of the single entity test. Things like, do you share officers and directors? What's the ownership structure? Who who makes the HR decisions? Is it the sub or the parent? So if that becomes an issue, you will need to go through each of the factors and basically come to your own determination as to whether or not the sub getting a federal government contract, quote unquote, infects the prime with the same requirements. Next slide, please. Government contractors are also subject to wage payment requirements under both the Service Contract Act and the Davis-Bacon Act. I'm going to cover the Service Contract Act. It applies contractors who are providing services to the government to pay what is called prevailing wages and fringe benefits to its workers that work on these covered contracts. Now, it doesn't apply to all workers. It only applies to those who are, hourly workers and would be covered by the Fair Labor Standards Act. So hourly workers generally who are not in management positions. It has very broad coverage because if you have a contract that's over $2,500, you've got to go through the analysis to see whether or not you have Service Contract Act covered employees, and then figure out how to make sure you are complying with with this regulation and statute. Next slide, please, Mallory. The way it works in real life is that the Department of Labor issues a wage determination that is attached to service contracts, and that wage determination lists job categories, titles of positions, and then sets forth both the minimum hourly wage and the minimum fringe benefits that the company must pay covered employees in order to be compliant. And the fringe benefits include things like vacation days, health insurance, life insurance, etc. Contractors are able to make a cash payment to their employees in lieu of the actual fringe benefit, if it's, say, not consistent with how it's run its business in the past. The tricky thing is that sometimes the wage determinations may change, and the wages will go up, and you will find yourself in a situation where you've got a contract, it's a fixed price contract, and now you have to pay your hourly employees more. You are entitled to an equitable adjustment in contract price if that situation occurs. The trick is to keep track of wage determinations because they are published by the Department of Labor, because sometimes the contracting officer doesn't even put them in the contract, and then a year later comes back and says, hey, wage determination went up. I know I didn't tell you, but you owe your workers XYZ dollars. So this is something that you really need to have somebody in the organization paying attention to. Next slide. There is also a minimum wage for workers who are covered by the Service Contract Act, the Davis-Bacon Act, and the Fair Labor Standards Act. It is currently $10.60, but it's adjusted annually and increases. If there is an increase and you have covered employees and you have to pay them more, you're entitled to an equitable adjustment to your contract. And it covers not just direct people who work directly on the contract, but if your back office folks spend more than 20% of their time on covered government contracts, then the minimum wage applies to them as well. Next slide, please. The next bucket is accounting system requirements. The government has a special set of laws that are regulations that apply to how a contractor must keep its books. There are, commercial programs, or there are, software that will assist a company in doing this. But it's extremely important to make sure that you are complying, with the requirements, so that you don't wind up either with some kind of an investigation or in the position where you find that you owe the government a lot of money. So the basic rule is that you're only paid for a cost that is allowable, that is allocable. That means it's allocated into the right contract in the right percentage, and reasonable. So again, the basic requirements is that you must be able to allocate costs to the correct contracts and accounts, segregate allowable and unallowable costs, and be able to justify the reasonableness of the prices you're charging the government. Next slide, please. The DCAA basically has a list of things it looks for. It's actually a checklist. So some of the things, it's going to come in and it's going to say, does your accounting system segregate allowable and unallowable costs? Can it segregate direct costs from indirect costs? How does it accumulate and allocate costs to particular contracts or other cost objectives? How are you recording, our employees recording time? Is that being accurately done? How are you generating your invoices? Who is checking to make sure that, an invoice is for, the correct work, the correct contract, et cetera. And you should be performing some type of reconciliation between your invoices and, what your cost accounting system says you are owed or you have extended on the contract. Some people do it monthly, some people do it quarterly. A question that is frequently asked is, hey, all my contracts are fixed price, so why do I have to worry about, direct costs, indirect costs, et cetera? There are a number of reasons. The first is that the government typically takes the position that you do have to worry about this, despite the very good argument that, hey, if it's a fixed price contract, if, that's it, it doesn't matter. If I overbill or underbill, we're sharing the risk here. The government does not take that position in stride. It fights back. Also, even with a fixed price contract, if you negotiate, if there's a change order, you're going to have to show a breakdown of prices to negotiate the change order. And finally, in terms of, say, your indirect cost pools, you can't have unallowable costs that are in your indirect pools that go towards, the fringe rates or the rates that you build up to get your final fixed price. Next slide, please. There's a whole host of unallowable costs. The FAR Part 31 lists them in detail. I am borrowing this line from an accounting consultant. The rule is if it's fun, it's not allowable. Entertainment costs, things like that, you cannot charge the government for. So moving on to sort of sourcing requirements. A large contractor is required to have a small business subcontracting plan. And that requires you to take a look at your total subcontract spend on a particular contract, or you can do like a company-wide plan, and set forth the percentage goals that you will spend with certain categories of small businesses, such as 8A companies, women-owned, veteran-owned, etc. If you are to set forth in that plan all the efforts you will make to meet those goals, If you don't meet those goals, as long as you are making a good faith effort, you should be fine, but you should also be aware that there's actually the potential for liquidated damages if you don't meet the goals. And this will apply to contracts over $700,000. So for the last slide, or the last compliance bit, I'm going to talk briefly about cybersecurity, which obviously is not a brief topic. Again, there really, except for certain industries, there are no other industries that actually have sort of written standards for cybersecurity practices. The Department of Defense has led the way, the federal government. They have information assurance requirements. They are very specific. Again, there's a checklist that you go through to see if you comply. And probably the showstopper for everyone is that there is a 72-hour notice requirement if a breach has occurred. And for those of you in the audience who maybe have gone through a breach, you know that 72 hours is not going to be enough. Sometimes you don't even know about it until 72 hours later. It doesn't cover all information, DoD information. It covers things like, control technical information, security of military operations. For example, if you are an airline and you are moving troops around, the data that relates to that would fall under this. Export control and anything else that is subject to disclosure prohibitions or limitations. The civilian agencies, the FAR, is not that far along. Its cyber regs are sort of aspirational goals rather than specific requirements. I think they've been saying for the last 2 years that they are going to publish, the FAR Council will publish cyber regs, but we haven't seen them yet. So the issue becomes many of the civilian agencies have gone ahead and they have their own cyber regulations. So, if you are contracting with the Department of Defense, let's say, and HHS or the Department of Homeland Security, you're going to have two separate, sets of requirements for protecting your information systems. Hopefully, we'll get something more unified in the FAR, which should ease this pain a little bit. And with that, I'm going to end, and thank you very much for letting me talk to you about these subjects.
Thank you, Mary Beth, for sharing your knowledge and insight today. Today's presentation has been recorded and can be found on our website or YouTube channel within about 48 hours. If you have questions about today's topic, please contact Mary Beth at the phone number or email shown on your screen. Thank you, everybody. This concludes the webinar.